basics rather than, the PowerPoint. And a lot of you guys have access to the PowerPoint, so you can kind of just go open it. There's some changes coming. I did put 18 slides on market profile that I'll share with you guys here. Just to kind of bring you guys into the speed of, you have the market profile and then you have the volume profile. When you understand the combo of both, right, it really puts a powerful market information, right? A lot of traders back in the day, right? Like Jim, I don't know if you guys know Jim Dalton, he's the one that coined the market profile along with Livermore. They came up with these views, like a graphical views representation of the market, so they can see the picture, actually, what is happening in the markets on the auction. And that's why I suggest, right, understanding the volume profile, at what levels the price trading, that tells you, like, at, let's say 4,300, there was a lot of volume and we went down from there, right? They auctioned lower, so they didn't like the price. That means most likely there was a distribution happening. At the same time, on the market profile, it's time, price, and opportunity. It's basically telling you, did we spend a lot of time here? What was the price and what opportunity were you given, right? So if we're spending a lot of time at that 43, let's say 100 level, and there's a lot of volume at that level, well, I would say that that level has a lot of value for somebody. And then we just have to figure out from what market are we coming, right? If you look at the daily sessions, are we looking into a bracketed market, meaning consolidation, or were we trending up and we were taking a breather, right? Then we are relaxing a little bit before the next move happens. So that's, in a nutshell, from volume profile to market profile. One is time, one is volume. And as you guys know, right, price, volume, and time, they really are the value of the market. And you as a trader, and this might sound harsh, but it's not, you as a trader will never grow and never be truly profitable, especially on the, if you're trading and building a portfolio of the long term, till you're able to distinguish value versus price. And, even my father-in-law, he says, if you don't know the value of something, then you know how expensive it is. You can always buy the most expensive thing and think it's the best, but not necessarily is that always the case, I would say, right? If you don't do your research and you don't buy, whether you're buying for the functionality or for the form and the looks of it, you really won't know, right? And the same thing is in the stock market, right? And you guys hear me, joking around and being serious. Like, for instance, Apple. I mean, do you really think, I'm just thinking out loud, just look at the market structure here. Do you really think somebody here from the big boys is finding value and they're willing to buy a lot of shares here? Put yourself in their shoes.
But no.
There's high odds that I would say they're probably not, right? High odds are that, they accumulated here. And let me just look at the price action here. I'll grab it from the March low to the highs here. And you look at the action here. They accumulated here a lot. They created an imbalance, right? Imbalance started. They broke the POC down. They came back perfectly here to the range bottom, and then they bounced, right? And now you're really sitting at, excuse me, at all-time highs. And I mean, you're printing some really nasty candles. And then if you guys add the volume piece, right, the bottom volume, which is also important, it tells you, right, that per day, what kind of volume distribution you're having, it becomes really, really powerful, right? That, you see this volume uptick here, kind of grab this, right? You see this volume uptick here, they pushed it up, and then you really think that somebody's buying with these candles? I don't know. I doubt, right, that they're buying. It looks more like an absorption candle, and then you have another one. Then they have another pop, and then this one here. You really think this is a buying candle? Well, I would want to see, with this amount of volume, what do you want to see?
A bigger candle.
You want to see bigger body, right? You don't want to see the VIX. Then you see them here a little bit slowing down. Well, let's see what happens. I think this is a break or make, potentially weak for, like, instance, an Apple case. They've gapped up a lot. A lot of times they've created gaps, right? So they have this island that they're creating here. There are some gaps in here, right? There's gaps on the bottom here. I mean, handful of gaps that they had. And I mean, they ran a lot. So the only way we can tell, right, where's a good opportunity to buy or sell, and that this is where it becomes confidence and repetition in the market, right? If I'm looking at Apple stock for my long-term portfolio, me personally, I would never buy here. It can go to 300 here, just like NVIDIA did, right? It can go higher. It can go much higher. But I have zero interest to buy NVIDIA here. They can have robots running the country. I will not buy NVIDIA here just because I don't see the value just yet. Fundamentally, is there potential for AI to run? Of course, yeah. I mean, there's always news, there's always running. But then if you look at this, I mean, why would I buy it here? From the long perspective, right? I know once they lose this area here, this giant gap that they did where they struggled a lot, they're probably going to revisit that. Then you see a giant shelf here, which would be the first point of what? If you're a swing trader. What do you guys think I would do here on the video?
Add.
I would add a long swing. So you add a long swing, and if you're interested to see where exactly is that, you would just grab this tool and click it. And you will find that this level somewhere around 270 might not be a bad add. With the stop loss probably somewhere like, let's say here 257, you will buy 3-4 months, right? When I swing, I don't swing. You guys know I don't swing a week or 2 weeks. I usually buy more time. If I'm putting my money at risk overnight, I want to make sure that I'm protected with time.
Mm-hmm.
And that's what options enable us. You know, when the contract goes from $5 to 15, and you change the contract from June to December, it's the time aspect that's costing you. Because you're giving yourself more time to play out, so they're going to charge you more. Just like interest rates. Why don't you go get a CD for 5 years versus a 3-month CD? Which one should give you more?
5 years.
Yeah. You're tying your money to something unknown, right? That's a long period of time. So now, if I'm swing trading, let's say for the stock, this is the level that I would have mark. And let's say you want to trade this stock and you're like, yeah, I want it. You're not chasing this price. And you don't, believe it or not, you do not need this many trades to be a successful trader. A successful swing trader, probably if you execute 20 good swings, you're done for the year. You don't believe me? Okay, well, what did we do with ZS between 95 and 100? Anyone? Did we buy it?
Yeah.
Buy calls, yeah.
Yeah, we bought a bunch of calls here. Well, some of us did. They were running around 2.6. I also got a bunch of shares between 95 and 100. I got them at 100, and then I averaged a little bit. These contracts went, I believe it was 2.6. They dropped them to about 70 cents or 60 cents. I don't remember exactly. And we had July 120 calls, guys. I mean, if you had 10 contracts, you would have made 20K on this trade.
Yeah.
And this, I think the trade was about 3 weeks, 4 weeks that we took. You know, let's see, I'm on 7 days. So about 4 weeks, $20,000, which is not bad on a $3,300 investment. If you bought 10, I mean, contracts probably hit 25, 26 highs. That's good money. And it's the same concept of accumulation on the higher time frames and waiting for the setup and trusting that. So in terms of NVIDIA, if they bring this bad boy here, this sets up for another, opportunity to buy maybe 3 months out. Let's say we hit this end of July. Well, then you're looking for December to buy I would say the calls. That's what I would do. And this would be the setup I'm playing. You set up your stop loss based on the shelves that you're seeing, right? So let's say this is the shelf. Where would you guys place the stop loss here?
Right below that next high
Right
volume node.
under the next shelf.
Yeah, so you could put it right here, or you could put it slightly right below these lows here that, they have. Me personally, I prefer to place them somewhere where the shelves are, right?
Yep.
So I can hide behind it. And if this is my, let's say, stop loss, and this is a long-term position, somebody tell me if I'm getting in, let's say here, and this is my, what should I be targeting?
Bottom of the.
The next node.
The next node.
At this point, you most likely would not know. You could target this run up, but what's really going to tell us where to get out is when they come here. Why is that? I want to make sure you guys, this is the run up. There's, majority of the buyers took over. What I'm interested is when they start selling, I want to know where they were aggressive and where the nodes were created. Sure, I can target this node here. Say it again.
If it takes them a long time filling that gap in coming down, when it bounces, most likely it's not going to bounce up too high. It'll probably just go a little bit like you're targeting, right?
Well, that would be an assumption, right? What I'm targeting is that I want to join these buyers that came in here before they ran it to 420. I want to join them, but the only way I'll know where to get out is to see how aggressive these guys were here on the pullback. If I see a volume node, let's say if you're starting here, and a giant volume node here.
Yeah, what nodes they create coming down is like what I'm getting at.
Yep. So if they created this node here, would it be realistic for me to target this? No.
No.
And I'm not risking enough to make 9-to-1 trade. That's impossible. I mean, it's not impossible. You need more luck than not to make some of these trades, right? If I'm targeting 3-4 months, or let's say 4 months, I would not target this. If I'm buying shares here and then I have intentions of buying more shares here, that's a different story. I would not go a heavy position of shares here because I want a dollar average. I would buy some here and then I would add a little bit more. And that's exactly what we did, if you guys recall, on AMD. We started 78, 65, 56, and then when it worked out, we sold at about 90 something. So this will be the trade I'll be looking, but as it stands right now, I would probably target something like this. And if you look at this trade, you honestly have, you go through your setups, right? You do this, you document it. If you have a little workbook or whatever you have, and you say, as NVIDIA approaches 270, I promise it will get there. And remember, it's 90% being patient. The rest is about executing your setups that come to you. When everybody here starts shorting, because what's going to happen is that you're going to have same FOMO that you had up. What do you think the market makers are going to do as you're approaching a buy level? Well, you're going to hear a lot of news. You're going to be running with B shapes here, probably some consolidations here, and then another breaks. And all of these B shapes that come in, that are coming aggressively in this downtrend, right? At one point, when the B shape gets lost, when the POC of the B shape gets broken, what does that mean?
If it gets broken on the way up, it's bullish.
On the way down, if we keep going B shapes down, and then eventually you have the POCs, right, of these. I'm just trying to draw it. And then you get this reversal on these. That most likely means what?
If they've accepted value there?
They've absorbed. So remember, a B shape means aggressive selling. We did not like the price. We accumulated here. That means either intermediate people took profits and they're consolidating here before we see where the next move is. If this was, a short-term selling and you see the B shapes and you see a recovery, that can be very bullish, because that means the absorption happened. They absorbed all the orders. The guys that were short here, let's say they closed their shorts here, that means they're buying.
Yeah, that's what I meant.
Right? And that's what you have to, it's really about the context of the volume profiles more so than anything else, right? If I see, let's say, I'm seeing a lot of P shapes. We're coming out of a downtrend here, and I see the P shapes coming here. Well, the first one, most likely would be a short cover rally, dependent where we are on the support. If we see a ton of support and you're not able to break that level, well, what do you think happens?
We're going up.
Bounce.
Well, what do these people do that were short?
They have to buy to get out of their shorts, which creates a short covering rally.
Exactly. These people, they're gonna be like, man, we're not going lower. The smart traders, they close their shorts here. They're like, we're not
Yeah.
breaking the lows. And then other people that saw, let's say, 54 EMA was here, and they're like, oh man, the 54 EMA is here. I'm gonna go buy it. And these guys start buying. These guys start closing their short. And remember what happens in an auction. If I don't want to sell the peanut butter here at $50, I want to make more money for it. If I want to sell it at 60, what happens?
You have to auction it higher.
Guys, this price just literally flies.
Yeah.
There means there's not many interested sellers at this level. They want more money for their product.
Yeah.
And then when you have these guys closing their shorts, and then you have retail and whoever, right, intermediate short-term buyers buying, it really creates those quick profiles on a P shape, and those are short cover rallies.
That's where you'll see no volume on the left on the profile.
Yeah, it would look something, typically it would look something
Yeah.
like
That's where you'll
this.
see the
And
ones.
people that bought here, what do you guys think they're doing here? If they're short-term traders on a P shape, trying to draw a P. If they
Getting
bought
out.
here, short-term traders, what do you think they're doing here?
Selling.
Selling.
Yeah, they're selling. They're taking their profits. And then, what do you guys think happened? This is very important you understand. And I don't know if I ever covered it. I thought about last night. My wife's like, "What are you doing?" I'm like, "Man, I'm just thinking if I cover what I have in my head to you guys most of the time. Let's say people bought here, and then most people got out here, but then we go again. Why do you think this happens?
Because if they bought and if they're willing to pay higher, they're trying then they're going to test it and see if people want to buy it even higher.
Okay. Anyone else?
Yeah, I was, from a standpoint, you have a short covering rally on the initial one, but you also may have hit bottom and people are seeing value, the FOMO, to push that next level up.
Keep going. You're on the right track. Keep going.
I would say, yeah, it's kind of a combination of things because I've kind of done it on futures. It's like you have a target, you get out, but then you kind of like might buy back in and just see if they're going to take it higher. Because yeah, you do have a lot of people that are going to jump on the bandwagon and follow the trend.
You guys are right on. So let's talk about the peanut butter. And if this is annoying, you can tell me and we can change it, right? We can change it to iPhones. If the peanut butter drops, right, the price drops to peanut butter, let's say this is $20 here. And people are like, yeah, man, the peanut butter, crunchy peanut butter is really good. And then they start buying it, right? They send it to, let's say this is $30 now, right? So now you created, a lot of people bought it at 30 and they're happy, right? And if this is the value of peanut butter, so if you think about, this is $20 and this is, let's say $100 and this is $5. Scale's bad, but whatever. If we're going far away from this price to the right, it's not a fair price, right? You're going to the levels that are extreme. If you go to the low, you can expect buyers and bring it back to the mean, correct?
Yeah.
Every time. Well, now what happens in the market, and this is how well the market works, right? I don't say the markets are efficient, but I say I think they do a good job of presenting the market auction, and the price kind of mechanism and movement is excellent, right? So if you think about this, person that bought here, let's say the news came out that the drought's there and peanut butter is going to rocket to $30. Then you have the people that are like, they're late. They didn't see the news. The peanut butter was bad. So these people that bought it at 20, they're like, oh man, I bought 50 cases of peanut butter at $20. Then Jim comes and Jim's like, man, I missed the opportunity to buy in 20. And here comes Cuban. He's like, hey man, I bought a few extra. I'll let you have it at 30. And he sells 10 to him at 30. Now, Cuban most likely covered half of his costs from here to here, but he still has peanut butter. Now, Johnny comes and he's like, man, I didn't get any. And this guy that bought 10 from him, he's like, hey man, I bought 10. I can let you have 5 here at 55. And then this guy comes in, and then David comes. He's like, man, I have kids and I really got to buy some. And he's like, hey, man, I'll let you have 2 at 100. And as you went up, the amount of buying slows down as the price went up. That means you're going away from the value to the right. And the same, if you guys remember the example I gave you guys with the guys in the village, when I come back, I'll buy those monkeys, right?
Yeah.
So the idea is that the further you go away from the price and the buying slows down, that's market auction, market telling you, hey, I'm not really interested at these prices. And if you're not able to hold this value, what do you think the sellers have to do?
They have to sell at a cheaper price.
They have to attract more buyers by basically doing this.
Yep.
Till it comes back to this level,
So
and then the buyers come back and then they drive the price again. And the concept just kind of repeats on and off.
So it's
right?
basically till it's attractive to whoever's buying
You
and
gotta
selling.
attract the price.
Yeah.
You have to attract the price. I mean, and this happens on literally every time frame. We are mainly focused at the beginning of this on swing trading. So for instance, if I look at this right now, is the price chasing value or is the value chasing price? In this case, just think carefully.
I think price
Value chasing price.
in this case is price is chasing value.
Anyone else?
Usually value chases price.
I think in this one, it's values chasing the price.
That's correct. And how do you know?
There's no value on this level of the price.
Just
The value wasn't established by them gapping it up
Where's the value?
lower.
The value is here.
I haven't tested that.
Have they accepted this higher price yet?
Nope.
No.
There's no acceptance. So now when you think about what we just covered with the peanut butter and spread, is there any value right now from technical standpoint? Technical, I didn't say fundamental, technical to buy this?
No.
There's zero.
No.
They have to confirm that they want this. They're going to have to come back to this level. I don't care what anyone said. They have to come back to this shelf.
Not to mention there's a big old gap in the middle.
Oh, they're going to fill that easy.
Yeah.
Let them miss their guidance on that quarter and see how quickly this stumbles. I mean, when is this? August. Okay, it's coming up. They gave a really strong guide. I mean, they gave guide. Yeah, let's see. They gave a really good guidance on earnings. So you're not looking to short this. Why? Why are you not looking to short this? There's people that are looking to short this, right? I mean, you could short this, but volume profile traders and market profile traders, you could short this down, right? Find the level. But why is it a better opportunity for buy than sell?
One, you got to consider time too, that there's still the possibility of manipulation, maybe that they could take it even higher or just run it sideways.
One has a fact in history, the other doesn't. Guys, I have levels where they accumulated from and where they created an imbalance from. What do I have now from the selling standpoint here?
Island top.
I don't have any reference where the aggressive sellers are so I can join them.
Mm.
How do I know at what level they're going to come? I have no idea, but what I do know is that they accumulated strongly here and they went higher.
Yeah.
So I'd rather join them when they bring the price with the known and let the setup work out. And if it doesn't, it doesn't. That means the buyers here were fake and we move on. But right now, I would be gambling more here than going long here, in my opinion. That's how I trade. Does that make sense?
Yeah. You'll be gambling more at the top because you don't know, but you definitely know that if they come back to the level of consolidation, you have a better chance.
Yep. That's
Hey, Shorty, I
exactly.
got a question.
Mhm.
Are you still talking about in the swing trade part of it and not necessarily intraday trade?
That's correct. This is the first section is about swing trading.
Okay.
Yep. So this would be the swing trading. But guess what? Guess what happens on 5-10 minutes? Here, let's switch. Let's look at this uptrend. So when you're making sure that you're going long on a bounce or short on a retest, what is the first thing you have to understand? Anyone? Cube, B, don't answer this. If I want to buy something long on a retest, what is it that I have to consider?
It's a strong trend.
What kind of trend is it, guys? Is it up or is it
Right.
down?
Yeah, if it's up or down. Yeah.
So let's take a look at this, right? I mean, obviously I'm looking at something that's consolidating, but you know, there's trends within bracketed markets, right? People don't believe that, but I've seen it and you guys can look at it yourself. So if this is my structure high and low, if I want to know, right, from here to here, where I can expect buying to occur, they came in here, right? They dipped below it and then they set up a nice trap twice. They went higher. So this one's on the buy side. Well, let me make sure this is not extended. It was, sorry. So now if you look here, look at this. They came here and what happened? They popped and what did they do again here? I'm only on 65 minutes. So what happened here? Would you have been locked out of this trade if you took this long here? Anyone? If you took this long here, would you been have stopped out on 65 minutes?
No.
I would say
Depends on what your
65
target
minutes,
is, yeah.
not a day trade time frame. I would consider that a short-term swing. There's a difference between when I looked at it on a daily and when I look at it on 65 minutes, the swing entry and the time is not the same. Does everybody comprehend that? I know it sounds easy, but it's not the same time frame swing.
Okay.
I'm intermediate here. On a daily, I become a longer swing trader. I buy 3 to 4 months on the dailies. 65 minutes, I buy 4 to 6 weeks. Does that make sense? So if I'm buying here, let's say this was an entry here. Where's my stop loss? Is it below here? Is the value area low? Do you get stopped out? That I can't define for you. For me personally, right? If I was to look at this, it would probably have been the value area low of this right here. And I probably would have been very close to, well, it wouldn't have triggered. It would have been nail biting, right? Where it's coming to an end, but depending how, you know, how much I was in for the position where the contracts were, I mean, that would have played a role, but most likely wouldn't have been stopped out. And usually on my swings, they play out. And it's the same concept that I'm showing you here. I'm using 65 minutes and trend down. Okay, well, let's reverse the idea. How would I find a swing short entry on this bracketed market? Anyone?
Reject off the highs. And
Reject off the highs to the lows.
Well,
Okay, so then my short entry would be where? Something like this.
Yeah. And your
So
stop loss
that's
would
my
be
short entry. Where should I get out? Think carefully.
at the
POC level to buy or
The previous POC to buy. Why?
yeah.
Okay, let's talk about the market auction that we just talked about. I'm selling the peanut butter and it's coming back to the value, right?
Yeah.
It's coming back to some sort of equilibrium. This is the equilibrium of buying.
Yeah.
That's this level right here. If I'm shorting this, I'm going here. Did anyone pay attention to the, we had a watch list the other day. We covered AMD and pretty detailed. What happened there? I gave you guys this and, identical what's going to happen a day before. Anyone recall this?
yeah.
We said if the price comes back to here, actually it was not that much. We said here, if the price comes back to here, then we're going to be looking for what? We're going to look for a short opportunity, right? And then we said if the price comes back to this level, we're going to be looking for a long opportunity. And what did they do that day? They gave you the short and the long was there as well. Now, if you break this level, do you have a setup here? If you break this level here, based on just what you're seeing on the chart, I'm not talking about to the left.
No, I don't think so.
Anyone else?
You can go to the top of the range.
You can go top of the range, but let's think about, I just want to get you guys thinking more about value and trading than anything else. If I'm here, right, this is the, and now we are here. That's what this would represent. This level here, value, if I was to go here and grab from here to here, the value is somewhere around here.
Mhm.
And the price is somewhere on the axis is to the right. Do I have the best RR buying long here on the retest?
No.
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 In this scenario that I'm showing you right here, on this thing right here, answer is no. Does everybody understand that? There's not enough value for me to buy it.
Yeah. It's too high.
It's not too high. There's a difference between price high and not enough value. You have to distinguish that. It's not high, guys. Price can go higher. I don't care about the price. This price can go.
Right.
I mean,
Just
think
not a
about
fair value. Yeah. Gotcha.
it. There's a big difference between price and value.
Yeah.
Is this price high for AMD?
No.
No,
Yeah, so.
I don't think so.
Not
I
really.
think it can go to $1,000, but is the value $1,000?
Right.
When we, when we started this, this was the AMD setup that we were waiting for. Many of you probably remember it, right? We waited for this setup to happen here, and look what it yielded for you. Would you say this is a pretty good return?
Yeah.
Yeah.
That's an excellent return. And that's understanding, right? Right now, what I'm looking at, obviously, this was my long level share and buying, like as it was here. I bought shares here, I bought shares here, and in between. If I bought shares here, if you bought shares at 55, would you buy them again at 120?
No.
Why not?
Because the value's back at
Because
your price
it's
for
not.
you.
Yeah. I don't find value there.
Same concepts, guys. I promise it works the same way. If you just every day you're trading, ask yourself, is there value here instead of the price? You will notice slight difference every day in your trading, and your portfolio is going to look more linear up than regressing down. if I bought at 55, what do you think I'm doing at 120?
You're selling.
I'm selling.
I would
So,
hope.
I mean, and if you think about this, right? If I grab a profile from, let's say, this sucker from the bottom here to the top. Right now, they accumulated a lot in 75. So if we bring the price, let's say, to 75, should I buy?
Yes.
Oh, yeah.
Yeah.
I don't mind paying this premium. 55 to here. I don't mind paying that, right? Because we reversed the trend. In my book, right? What you did here is this was your change of character right here. Right? You changed the character. Now, the goal is to do what? We want to find where you're going to be bought back up aggressively. And if you know about Wyckoff, right? There's something called here. There's a test here. And they're going to find the demand of this run up and they're going to load up and then it has a chance to go higher. So if I wanted to find this here, this is the level. If I'm looking at 95, I guarantee you we're going to get a bounce here. I would guarantee you're going to get a bounce here. If I grab the whole thing right here, the value, I mean, obviously they accumulated a lot here. But look at the value that was, created here. I think this was also earnings. There was stuff being done here. But first bounce swing, 95. What would that do to a short? Just think psychologically. Oh, we broke the 100. We're going lower. Right? And all of these triggers to create the FOMO, it is for you to perceive the value as if it was good. And if you guys remember, we had the scenario. I got stopped out on a short. On this short, do you guys remember?
Yeah.
We bought them. We bought the shares at 170 somewhere. I think we bought somewhere around here. We bought the shares here, and then we were looking for a short somewhere around here, right? Somewhere around here, we shorted, I believe, a couple of times. I don't know where it was. Maybe here. We shorted this, and it didn't work out, right? We got stopped out, and then they went much higher. They gave them a bull flag, popped, and then at this time, if you guys go back and just kind of time-wise look at the news and PR, everything was pointing like, hey man, Caterpillar is going to create a robot that builds buildings by itself. I mean, everything was bullish, right? But then what do you notice about the volume? Look at these volumes that are coming in.
Big selling volume.
They're really not. If you look at this, here's your P shape here. If they created value on the bottom, a long-term seller is going to do what at all-time highs?
Sell.
Sell. Most likely he's going to sell at all-time highs. So now, if I just look at this, right? If I look at this right here, what do you think this one's setting up for a swing? Right here.
Short, yeah. A short off that.
Nice short.
This is setting up for a perfect short F, 257. Remember, I don't do single levels. Right here.
And if it goes over and comes under, it's even better.
Yeah,
right?
this one is not going to.
Gotcha.
I'm pretty confident this one's not going to pop over 250.
But if it would even be
if
a
it
better
does,
setup, right?
If it does, our typical A plus, and you're targeting this domain here.
Yeah.
It would be somewhere. Yeah, right there. Does that make sense? So you made higher highs, you made lower
Yep.
highs, you cleaned up the lows here. You cleaned up the lows nicely. Now you're going to come back to a supply that created these. So now what they're doing is, hey, can you guys just drive them up one more time? We have a little bit of extra peanut butter we want to get rid of before it goes stale. They're like, oh, okay, no problem. PR, boom, send it up, and now you watch. If anything, if you want to learn the swing trade, just watch this every day. Check Caterpillar chart. They're most likely going to reject right here. They're going to reject a little bit, then they're going to spike through it and go here, $10. And just like every time, once retail sees that we have a gap up and we're close to all-time highs, what do you think they do?
They buy.
Oh, they're going to buy. And remember, it's not me and you, but me plus you provide enough liquidity for them to exit.
Yeah.
If I buy 100 shares and then another million people buy 100 shares each, now you multiply those shares and they're able to get out of their positions.
Yeah.
Right? So that's in terms of long swing trading. Is there any questions on swing? Is it clear at least how to think about it?
Yeah, definitely.
I do have a question on one of the trades that I'm in on the Oracle, which looks like
The
it hit
all-time
the
highs.
all-time high. Yeah. And now it's popped above, but now we have earnings on Monday. So it becomes kind of an earnings play, I guess, on whether we're going to drop
Are
it
you
or
on
not.
shares or
No, I just have some options. I did the option put.
you bought puts
Yeah, didn't you get puts? I think you
on Oracle? No, I don't have puts on Oracle.
maybe I'm thinking.
I think it was we talked about the October ones,
something like that.
the 95s.
Yeah, 90s,
Yeah,
I think, or something like that.
yeah. I didn't get filled in those. I had
Okay.
a price, but never got filled. It was 90s or 95s. I'll check my fidelity. But the problem with something like this is the same concept as NVIDIA.
We don't know how high it'll go.
Shorting a train like this becomes very difficult. Is there a chance that they're going to do a pullback to 95 on earnings? Literally during earnings, do this, and then the CEO comes and says, "Hey, we're going to have AI down ERP systems," and poof.
Yeah. Okay.
Right. If they give that, there's a high probability for a 95 retest. And I've been watching Oracle for this one and Plan. Let me show you Plan. Oh, why is Plan not? Is Plan gone? What? I'm kind of weirded out. I'm sorry, I was just confused. Oh, wow. Since Thoma Bravo bought them, they took them off from public markets. Okay, so there was a similar company that is called Anaplan, and they do similar stuff, but more on the FP&A side. And I was watching, and they had the same pattern developing as Oracle on longer time frames, like this right here. And it was trading at 46. I guess they took them off the market. With stocks that are dealing with the industry that they're in, like this one, I don't know if you can time the top at all. It's better, if you look at this right now, we're breaking all-time highs, the previous high 106. If we do come back, let's say to 95, this area, most likely you want to close your short. If they break that, I would definitely close my short here. Because now if I look at this, look where this level is. Right now, they're creating a lot of FOMO, right? They're putting a lot of pressure. Hey, we're going to be, going higher and all the AI crap. This has to, at some point, revisit this level here. It has tiny little, I believe he talked about 95. Maybe I'm wrong. Maybe a different ticker. I thought it was 95 Octobers, or let's say 90. There's a very, very high odd that you're going to come back to this level.
I think I got into September 90s.
Okay.
I think is what it was.
I think we talked about it being 211. The contract that I remember was $200.
Something like that.
I'll check if I got filled. I don't think I got filled on this. But I would watch for this. I mean, the only problem you run into is that this can continue on depending on the earnings, right? It's a gamble. And you said it's Monday?
It says the 12th.
Wow. Yeah.
June 12th.
So it'll be
Monday,
interesting.
right?
I mean, you
Yeah.
got time, but I would think if they're gonna do the pullback, they're pulling back to 95.
Mm.
And I, for a fact, know that there's delayed payments to this company by a lot of, I would say, vendors or customers. So that'll be interesting, right? And the only one that's pushed back on a lot of customers is Adobe. So it'll be interesting to see what happens to some of these big conglomerates on services and ERP systems they provide. But this will be, you know, I would close. For instance, I would close a lot of shorts here if I was shorting and I become a long swing buyer on Oracle at this level. Right. And if I look at the weekly, look where they came here last time. If you think about this, they came back right to this manipulation here and they never really revisited 53. So they're eager to get this going and they hit kind of the top nodes here. They came back and pretty much doubled in price. So whoever was a long-term buyer at this level, they doubled their money almost there. So it would need to be what happening now in terms of auction for them to continue. What needs to happen here?
If they had great earnings, I could see them spike up, gap up, and then drop down and retest that line, that level to continue up.
Yeah, it would be a fade, but you would need a new long-term buyers to step in. Right. And I just think we're very fresh, you know, from this run up here. You know, you're talking, let's see, this is 90 days, 3 months. You know, you made about 20-30% on this. It would take a little bit probably to initiate long-term buyers. I think they will have to, the buyers will stay here as they bring the price back. If they have great earnings, drive it back to here, and then I think they can drive this higher. I think they're due for a pullback. Okay. For instance, Nike, let's take a look at it because I'm interested myself. Here's Nike the way it played out last time. Look at that. You guys don't like $50 on a share, do you? Here's your value area high, here's your value area low, and here's your mean. And the concept of what I explained earlier, reversion to the mean, does it make sense now? You consolidated higher, you popped higher, you came back here, made lower highs, you failed to hold the value area high, and what did you do?
You drop back to the consolidation point.
This is the mean. This is value area low. This is value area high. And this is right here. So you did not like it. Once you fell back inside, you reverted back to the mean, and there was a lot of buyers there. They liked Nike at 82. It's a really good deal if you get it. Now they're back at this level, and you see here that this demand did not take out the previous supply here. So they took out this supply here. This was probably late sellers that came in. They had this level here, right? And you see them, they tried and then they created it, and now we're bouncing here. So in terms of sentiment on Nike, what is it? Short or long here? Let me delete it so you guys can
You
see
go
it.
long, but you don't gonna short unless it's breaks it and retests.
Yeah. Here, you're actually looking for a long opportunity because they reclaimed the key selling point. And then if you look at this right here, what do you see on the buying side that matches this? So the buyers really stepped in at the same level right here. Right? So the lows were right here, right? So at 102. So now I would say you break this 108, you probably have a potential to go revisit some levels in here, and you see the liquidity is pretty bad. So if you know, let's say you break this level, you can almost target 111, and then the next supply that I would care about is probably somewhere around here. So if you look at this, this is probably the next big supply, and each one of these is gonna offer some resistance, right? You have this one, gonna have this guy selling, and then in between. If you're kind of momentum retest type of guy, break and retest, and you want to catch every one of these long. So let's say you break this long, you close here, you go here, you do this, you go, I don't know why is this sticking to price levels. You go here, you reject. And each one of these on the smaller time frames, right? And these are not swing entry points, but these are your profit targets if you're waiting for a major supply to get hit. And a lot of supply obviously came in from this level here. The whole thing here was a supply, and you look how heavy that is right around this level right here. And there's also a secret low supply there. So 120. So if you break, let's say 108, you can target 120. And what do you do at this level? Most likely you want to close your longs at this point because the risk to reward is bad. And then you look at this, right, from perspective of pattern traders, what do you see? What do they see here? You have a double.
Inverse head and shoulders.
Well, you have a double bottom, double top, I'm sorry.
Mhm.
You have the neckline break, and this will be the retest of the neckline. And that's where these type of traders will do what on this level?
I'd go long.
Short.
Oh, they short here, guys.
Oh, short. I'm sorry. Yeah, they would.
They would
They would
short this, right? So they're looking for a short opportunity, and Amazon had the same exact pattern on the monthly way back. Multiple tops, right? You break it, and look what they did. Came back and then short. And this was our swing short entry for Amazon, right? If you guys remember. So is the swing setups make sense? Is anyone confused? I'm gonna see if there's anyone on YouTube asking questions. Any questions?
No.
Okay. On the dailies, right? And we use on ES, we use 30 minutes, right? And it's all about the context and where we are in terms of trading. So I'm most likely going to switch to ES contract just so I don't have to worry about the price and adjustments. You can mark where the previous contract ended, right? It's not a bad idea, right? I think it was like 43 or something like here, where it ended and where the new one opened up. And usually I would say a lot of times these gaps get filled due to the contract inefficiencies. So I would probably switch here and kind of start looking at the volume profiles on this and trade off of these. And I'm pretty sure September contract is going to pick up steam here on the volume. And whoever's got it ready, you can check to see if it's doing so. So now if you look at this, let me change this to extended. The context of ES on the daily setups, right? So you have a P shape, you had a short cover rally, right? You popped here. Then you have FOMO buying, right? So this is what we just covered moments ago. We have P shape, they bought. These people that bought this here, what do you think they did here? They sold. Then here comes the gyms. Remember the gyms and the peanut butters? They're like, yeah, man, this is going much higher. Yeah. And then they sold. And what do you think they're doing here? As these people keep bringing it back up, the long-term seller's probably absorbing and selling because every time it hits here, it goes down, goes down, goes down. They're absorbing. Then you got an influx of new people, and whatever happens, they break the level and they created kind of an imbalance in this case. And they're popping higher. So now what you can expect, what would you expect to happen here if this was our range, let me. If this is our balance here, right? What would you expect now to happen here?
For them to sell on top and come back to our balance,
Anyone else?
or continue higher. But I doubt it.
Okay. Anyone else? Based
Have to come back to accept the new value. Come back down.
So
Yeah.
if they can't create value higher, right? I'm just gonna select this here.
Yeah.
Where's the value left? From the value that we left, remember the reversion to the mean, right? We left this side here, 42.88. If we are not able to hold this value area low, let's say tomorrow or at 6 p.m., where do you think they'll go?
Right back down here.
They're most likely gonna come back first. Let's say, sorry, where is this? They lose this. They're most likely gonna come back to this, I would say 61, the first sig,
Yep.
which should be about 4,300, right? And there's a VPOC right there at 4,300. And then they're gonna come back here.
Mm-hmm.
These people that understand the market information being provided, I would expect them to do what here? If they shorted this, what do you think they do here?
Bounce.
They close their shorts and they buy.
Yeah. Bye.
And what are most retail gonna do here?
Sell.
No, they're gonna
Keep
short.
shorting.
Yeah.
And
Short.
that's where the dual tape happens. They're shorting, but the price is not going lower. As the price is not going lower, right? They're getting absorbed, and then they have to cover. And then this process of this starts repeating. Does anyone recall the watch list on Sunday? Last Sunday, I said we had the balance here, and I can bring it back up if you guys don't. We had the balance of 4 days, and we said the 5th day we popped. Does anyone recall that?
Yeah.
Mm-hmm.
So 1, 2, 3, 4, 5, and then the 6th day we popped. Right? And now if you think about the values being created, well, here's your value right here. This is the value here. Now you have a value being created here. What are you noticing, let's say, about these values thus far here?
Higher high and higher lows.
That's correct. But they are overlapping a little bit. You see the overlaps happening here. There was minimal overlap happening. Now there's overlapping. If the
Yeah.
values start overlapping, what do you think happens in the market auction? Anyone? If you're going up and the ranges are overlapping to the upside, first they were not overlapping.
It
Right.
looks like they're accepting to go up, but they're selling off, so they're slowing down their push up because we're dripping down, but it is finding new buyers.
Correct.
You're
Okay.
getting more aggressive, but then with the overlap, you're getting a new group of buyers buying in.
That's correct.
Initiative buyers.
They're showing up, but the long-term sellers are taking this opportunity and offloading what they have, guys. Because think about it. If you're overlapping with 0, right? I would say this is 0 overlap here. Then the next range, you start overlapping a little bit more, right? Well, now, if this is able to, let's say, if you look at this cumulative from here to here, if they break this POC here, where would you expect them to go?
Going
The
down.
starting POC at the bottom, where they for
Where
the
the
Most
run up.
likely go back to this range here,
Yeah. Where the
and
break
they would
was.
visit 42.16.
Yeah.
If I may, and this is not getting on what you're teaching, but I think check your contract. I think you might be on the old one, and the June
No,
one has that doesn't have that gap there.
I did ES. I'm gonna go back to September. That's what I was just talking about.
Oh, okay.
I will be on September contract. September's here.
Yeah,
Yeah.
no, it doesn't. It doesn't have it.
Doesn't have a gap. Yeah, they don't have no gap like that. Yeah, gotcha.
But
Does
it
that
is still
make sense?
moving. But it is still moving up, even though we
Right.
didn't gap, and it's
That's
testing down
correct.
within the
And
value.
if you remember what we covered earlier on the auction, this is where you have to kind of correlate it, right? We have our x-axis, right, and the value. I sell the peanut butter. What happened to the number of peanut butters we were selling as we were going up? We're going up. This
It
guy had
started
5.
decreasing.
This guy sell 3 here.
Yeah, it started decreasing.
They're trying to offload.
Yeah.
Because every time you get these P shapes and then aggressive another P shape like this, all of these P shapes here, somebody's taking profits.
Yeah. But as they go up, they start to decrease.
Exactly. And now, at one point, if you look at this, they had a P shape consolidate. Then you have a P shape with triple distribution here with a lot of poor structures that haven't been fixed completely yet.
Mm-hmm.
And now, you have almost like a perfect, I would call it almost perfect distribution here with a spike higher and then unable to close above the value area high. Well, simple rule of market, right now would tell you if you grab this consolidation, let me just go and hide this. Okay, and you're below the POC. Okay, I'll give somebody a bet. If this is too easy, I can't. We're gonna tap this tonight at open.
I bet.
Yeah, most, I would say 99.9% we're gonna tap this level.
We close under the POC, so most likely that's what we're gonna open under.
So, and the way it works, right, is the value has been created now. The value in this case, what happened to it?
Has decreased.
Anyone else? Let me exclude this day here. Let me exclude this day here. I excluded this day. The value area high is at 43.42.
Mm-hmm.
Okay.
Same
If-
thing in like the higher price.
If I shift the price to the top, what happens now? What happened to the value?
Value area shifted up.
What does that tell you?
You're trying to
continuation up.
find new value.
Anyone else?
The value moved up.
If you're buying and people are finding more value higher, is that bullish or bearish?
That's bullish.
Bullish.
That's bullish. So right now with this shift up, as long as they hold what level is good.
The value area.
The value area low of this new value,
Yeah.
which is 43.38, right?
Mm-hmm.
If you break this, where's the most likely you're going?
To the middle point of
You
the
go to
prior
the
value area, the
PLC.
4 days. Yeah.
Which would be 43.31,
Yeah.
which is not a lot. But remember, bracketed markets, limited risk, limited reward.
Mm.
And if you break this POC, where are you going?
You get that
To
node right
Value
there.
area.
Which happens to be
Right there. Yeah.
The value area low.
Mm. Yeah.
so the odds of you making money are where? This is intraday trading and reading the context what I'm teaching here. I'm not teaching you to make millions. Where's the highest probability trade here?
When they break the value area, when they break the value area high, you take profit at the POC, and if they keep going, then you take profit. The next trend will be at the value area low.
Exactly. So you have two trades that will pay you. You have, right, you have this 43.42, the 38 is the value area low, including the last day here, which is good. Once you lose this, you have about 8-10 points you can catch. 8-10 points on ES is quite a bit of money.
Yeah.
8-10 points on SPA contracts is 100%. You don't believe me? Go check the last time we moved 5 points on B Neuron. We moved 5 points and the contracts went up 70-80%.
And Q's even more.
So, and a lot of you are focused on, you're not gonna know these moves, guys. Most of you will blow your accounts on trend days. Because you're expecting something and you're not willing to let go of being wrong and your ego. And that's really hard to overcome. And if you're able to kind of just pick up, just think about picking up 30 points on ES on one contract a week. Does anyone know how much money that is a week?
How
That's
much?
6 points per day.
36. Wait.
$300 is 6 points.
Yeah.
That's correct.
So 6
if you-
grand.
$1,500 a week. Jesus.
And you're telling me you need to catch the whole move? Are you happy with 6 grand per week on 30 points?
Yep.
Oh yeah.
All you have to do is wait for your setups. And if the market's not giving you a setup, then maybe you don't have it, right? It's not there. You don't trade it. And here, these are the setups that I would look for. If I can catch this to here, 7 points secured. You break this, I can catch this. You might be done for the week. I don't know. I think last week, one day I said, hey, if this happens, I'm done for a little bit. Because it's money in the bank and I'm not willing to give it back.
Yeah.
Once you develop the mindset of, little bit by little bit, I catch this, I take it, multiply it 6-7 times per week, man, it accumulates a lot. 6 grand per week is a life-changing money, probably for all of the people on the call.
Yeah, I think I calculated that wrong.
Well, 30 points each point, you have,
I think it's 1,500, isn't it?
it would
That's
be a
what I-
little less.
Yeah.
Yeah, that's what I.
But yeah,
It's no matter what, it's a lot of money.
Even $1,500 a week, that's 6 grand a
Killer.
month.
Yep.
A lot of cash, man.
Many of you don't make 6 grand a month in your job.
I don't.
I'll be satisfied with half of that, man.
But that's, your expectations, and a lot of people have expectation that the market only takes money away. It's a zero-sum game. It also gives opportunities, right? Time, price, and opportunity. But you have to be ready to take the opportunity. And, we just analyzed 6 days of data. And is anyone confused on the plan, what I would do on Monday? I looked at the data, short cover rally, they came back, they defended it, new buyers found, value low, became a POC, and it's identical what happened at 39.88 way back here, somewhere right here. If I draw this right, it was somewhere around here. No, I think it was this here.
Shorty.
We had 39.88. It was this level here where we bounced from last time. And I mean, we exploded from that. We never really looked back.
Mm-hmm.
It was something like this. Yeah, it was something like this. Yeah, there you go. I remember this level. And it's the same concept repeating everywhere. Market is looking always, for equilibrium retests. And you just have to understand between the value and the retest and the price. And you play it accordingly. You put a plan and you trade your plan. A lot of you guys put a plan and you deviate and trade somebody else's plan. And
Shorty. So let's say tonight they can you draw those where the lines again? Yeah. Okay, so let's say tonight they take out, they take out and they go all the way to the bottom to the value area low. Okay.
The
So,
value area low of what? Sorry.
well, first we had the plan of taking profit at the POC, and then my next profit would be at the value area low.
Okay. Below
Okay.
38, correct?
Okay. So let's say they take that out tonight. So then my next level would be the next value area, or I'm a buyer to go back up.
You can be a buyer right here, and that would work out better.
Gotcha. Yep.
Because this is the next liquidity zone if you look at liquidities.
Yep.
September.
So look, you would have levels here. You're going to have a bounce here.
Yep.
If you break that, then you get a level here. And do I know we're going to bounce here? No, I don't.
No,
I have no fucking idea.
it's just probability.
Do I know that we bounced here and they were buyers last time? Yes, they had a little bit of level and they had a, nice tweezer bottom and they popped higher.
Yeah.
Are we making higher lows? Yes, we're making higher lows. Are we making higher highs? Yes. So now I'm just interested to see where is it that you're gonna go? And where's the level that you might bounce from? On the latest one that I'm looking here, right? And you see this is a congestion level right here. So if they're able to slice that, will you catch a bounce here? Yes. Are you gonna catch a bounce from here to go to 43.64? No.
No.
And that's the expectations of the trade. If I play a trade from here, right? And I'm expecting this to work,
Yeah,
there's
that's a
no
lot.
way.
But you can expect it to work on the next line right
If
there.
this comes somewhere like this, and remember, you're trading futures. Most of you guys don't swing futures, right?
Mhm.
This trade here, could this happen that we hit the value area high of this new zone?
Yeah.
Yeah, if we defend the value area low, why can't we, the opposite of extremes attract. If we go here, right, and I put this stop loss somewhere here, this is a doable trade, but you need time.
Yeah.
You need time, and it will most likely need to be something like this where you're trading. Is there a potential for this to work? Yeah, definitely. But you have to manage it where, this trade right here cannot produce the same result like this here. You will have to target a little bit smaller, right?
Mm-hmm.
Ideas, right? So if this is the first one, maybe you will be targeting somewhere in between. So almost 3-1. So your risk is lower, but so is your reward.
That's still a good trade, man.
No, it's a very good trade. And most likely I would say that they're going to tap that level that we just identified, the value area low. Okay.
Yeah.
So any questions on at least reading the profile reading is not going to come to you overnight. I mean, it doesn't matter what you do, how much time you come on. But I would say, and if you want to understand the market internals and market information generated by volume profile or market profile and understand footprint charts, and if you use unbalanced volume, all of that in combination, it will take you time, and it's not ever going to stop. You're never going to be like, man, I'm done. It's not like a game. You finish and you finish the game. There's no finish in trading. It's continuous learning and adapting. The markets change.
Yep.
So a lot of you guys that come in, and not only my Discord, anywhere, you come into a trading and you're like, man, I put it in 2 months and I'm not profitable.
Yeah.
Well, there's hard truth to that you're probably not committed enough in the right way to learn. Maybe if you're learning 10 different strategies, you're not focused enough on one. And then second of all, if you can find a job that can give you, let's say, 1,500 a week, and you only spent 2 months training, let me know. I'll take it.
2 months ain't shit.
There's no job that you can take in 2 months and make 15. How long do you guys go to school to get a salary of 70K? How long did you guys go to school for?
4 years
Anyone?
of college.
You had to go to 4 years of college to get that diploma. And then you get an offer for $80,000 and you're so excited. So each year produce 20K for you, minus the cost and opportunity missed. But you come to trading with the mindset that, hey man, I didn't turn profitable in a month or 2 months. Yeah, that's not working out. Okay. Once you learn the skill, it's a lifelong skill and it's a lifelong independence. It takes a lot more than your W-2. But once you have it, it does, drastically change your lifestyle. Or just makes the one that you want better, whatever that is. So you have to be patient. You have to think logically. You have to have a clear mind when you're trading. As soon as you a lot of you, if you start with a negative trade, and you guys hear me sometimes when I'm trading live, what's the first thing in the morning I do when I get in a trade? Anyone notice?
Take a quick trade.
And
Get
I
out.
make sure it's green.
Yep.
Why do you guys think I do that?
For positive already, your mind being positive and being confident.
Mentally, yeah.
It's my mental state, guys. That's how I work. It doesn't mean you fucking have to work the same way. I'm wired differently than you. I like to get in and I see the setup I like. I take 150 and you guys hear me. I just made 150 here. I'm good.
Yep.
And then I get in the mindset of, honestly, I get in a zone and I'm playing with the market. I'm in the market and I just play the levels as they're happening.
Yeah,
I know what they're doing. I'm able to anticipate, a reaction at a certain level, and I play it. The other day we took NQ. We were waiting for a long level. If you guys recall, I bought 10 contracts at a level. I forgot what it was. It was I don't even know. It was something with 55.
I remember
50.
that.
Well, I don't know. Now I'm screwed on the levels. I don't know.
All I know is we all made out pretty good.
So,
I don't know if it was the long or the short, but we made out.
I really don't know where it was, but I bought 10 contracts. I went down, I think $800, and then I averaged down 12 contracts. Can everybody else do what I did? Probably not.
No.
In some cases, that trade was a loss. I still believed that setup that I saw, they were not breaking the lows. They were holding the value area low. Then they drove it up, I think, maybe 12 points total. I put in a lot, but I didn't make a lot. But it was a trade that I would not, if I think about it, statistically, I shouldn't have doubled down. But technically, did I see what I wanted to see? Yes. Did I get in early? No. I didn't get in early because that was just a manipulation below the level that they needed to bounce on. And then, I came out alive and positive. I risked too much to make $1,200. But it was a successful trade, but not something I'll be like, okay, let me repeat this trade nonstop.
Yeah.
Because one day you're going to average down 22 contracts, and what's going to happen?
You blow up.
You get destroyed.
You get destroyed.
Yeah.
And if you're never played NQ, don't play it. If you're new, don't play it. I'm being honest. You can get a heart attack.
I hear you.
But it can also pay well, right? If you're playing the minis, I think it's much smaller movements on the price versus ES. So you can play that, right? I mean, it's okay to learn. And I'm not telling you, don't practice what you're doing. If you play one mini on ES or NQ, you can learn this with, I would say, $1,000 put in your account. If you're practicing proper risk and reward, you might grow the account, but most importantly, you'll learn what to do. And once you get into the futures trading, I think a lot of you guys are going to hate options.
Yeah, that's me right now.
Yeah, already.
Yeah.
I could care less for them, honestly.
Options add another level of complexity. I would say, not being mean, that most of us or most of you guys will not be able to comprehend and play properly. Especially, you guys probably noticed when they added SPX 0DT, how many times do I trade SPX lately?
Not very often.
Not very often.
Yeah.
Well, they shifted the landscape, guys. They totally fucked with SPX options. So why would I be the first one to experience the pain?
Yeah. Contracts are way up there.
And they're way up there. There's a lot of manipulations, right? And they're doing the stuff that's benefiting one side. And it's almost like as if casino changes the rule in the middle of your game that you're playing. I mean, you'd be stupid to have interest in playing a rigged game, right? So why would I, why would I do it? So I shift it. And do I play SPX here and there? Will I risk 100, 200 bucks? Yeah, I risk it. I don't mind it. But I shifted knowing that I play swings, right? And you guys see me entering more swings than 0DT SPX. As we reach some levels, I add, right? And that's the idea, right? I mean, their market's going to give you the looks, the opportunities. You have to know the time frame you're on. We cover the swing, we cover the day to day, and then honestly, between swing and day trade, and it's the same concept. It's the time frame that changes. Are you a short-term buyer, seller? Are you a scalper or intermediate? They all have different levels that you should probably use, right? If you're using, I would say, if you're day trading, 30 minutes is your friend for looking for opportunities and setups. So, for instance, right now, I'm just gonna go NQ here. Where did NQ bounce here? So I'm only grabbing to the highs, guys. I'm only grabbing bottom to the top. And I know this is post, but this happens every fucking day on these time frames. So now that we bounced here, if we lose this level tomorrow, what would you expect?
Drop the value low.
Most likely dropping to 14.3. Are you gonna drop tomorrow to 14.3? Probably not. But is there a level for you to take a short trade and catch points in between? Yes. So if you use 30 minutes, I mean, here's NQ. If you use 30 minutes and you trade, if I grab this and I grab to the bottom, I'll just go on 15 minutes now to see it. So here's this. POC was here. And how come you dropped from this level? Why do you guys think we dropped from this P-shaped POC here?
Well, it's the top of the whole range. NASDAQ's a little different than the S&P because you have like 5 days. That's your value high area.
Mm-hmm. This would indicate that they're taking profits here from this. From this run up here where they accumulated, they popped, they're taking profits on a P shape, and they haven't been able to revisit this yet. So now if these buyers can't hold, your sentiment for a short term is?
It's funny because where you got that POC, that's the PD POC.
Yeah, that's. So now if they lose that, your sentiment changes a little bit to bearish. And you would play, you look at the liquidity zones. If I look at this right here, let's see. You came under here, you come under this one. Would anyone be against 35 points on a contract? There's no reason.
Hell no.
No.
35 points.
700 bucks.
Jesus.
This is a done deal on one. Right? So now if you look at it, right, the run up is here, the value area high is here. So if we fail to hold here, pretty much have an 80% to the downside, guys. If this is the level, I didn't mean to do that, sorry. Grab this. If this is our value area high of this, and this is the POC, could you short between these two? Yeah, most likely you could, but would I? No. I personally don't want to short when we're approaching equilibriums, right? That's not something I do. But could you less risk below this? Yes. Once you clean this one up, right, you're going to have some supply right below, but most likely you're targeting this. And then if you look at the bigger picture, I mean, you're in a bracketed market. If you go on 65 minutes, here's your levels. And guess what they're doing here? They run above, they're not able to hold. So now let's see if they push to 15, is this 8, 15.5, 8? What do you think I would do here at this level? At the black line.
Buy. I mean, at the top,
Short
at the
on the
top, you
reject there.
short.
Most likely I was short it, guys, because you went
Yeah.
above the value area high twice, right? You did not find value here. You did not find value here. You did not find value here. Now you are profit taking here, obviously. This is your profit taking. And now if you come under this POC, and the sellers are gaining, you know, the shift, then it might not be a bad idea to take this short and then you potentially scale out here and keep one. Or if we break this, add an M and target the bottom. Because I'm pretty positive. Yeah, 95. Yeah, so there's a high chance you're going to be going, I know, 14.2, about 300 points within the next 2 weeks. This will be the target.
Yeah,
That's
14.
$600 on a mini contract
And how much does it
or
mean?
micro contract or whatever. The smallest contract, I'm saying.
Yeah, that's 14,255.
Yeah. So now you're looking at this. I mean, you could even target to see the accumulation on the top, right, to give you the story. And look, that's the POC right here. High chances that they can clean this liquidity that they're generating right here, and then poop, they will clean it up all the way to here.
I got a level that you got marked that says basically big dump from here, which
This
is
a big level here.
which is 14,488.50.
14.4.
14,4. Yep, you have it marked on the other chart where it's saying.
Well, this one is, yeah, I mean, if you look at this build up here, right, this is probably the POC here.
Yep,
Here.
from there. Yep.
So if I'm shorting here, most likely you would be careful on this latest one here. And if they lose this,
Yep.
really have, guys, look at the structures here. I mean,
Yeah, it's
in market
nothing
pro,
new.
this is a single print. Most likely they're going to have to fix this to 14, call it 4, probably get a bounce, and then eventually will lead to this, I would say this zone here.
Yeah.
This would be the zone that they're most likely targeting on the bottom.
So about 50% of that is probably maybe a bounce right if they lose that level. About 50% there in the middle.
I would say that's 50%, very close to it.
Okay.
Let's see, this right here. This is 50% right here, 14,472.
Okay, yeah, I got that marked. That's awesome.
So premium discount. Okay. All right. Talking about orbs, we haven't covered it a lot. I think they're straightforward, so we'll do that now. There are certain rules on orbs. I do like to use these on ashy candles versus the regular candles. I know you miss out on the price action side of it, but That's the point of it, right? So you have the trend bar, which is your line here that you guys see, right? It's basically your CCI. It's a lagging indicator. And it's basically technically giving you on the lagging indicators momentum, strength, and buy. The little arrows, right? So if you guys think about it here, you guys have a lot of stuff that you can do, right? So the fib colors you can change, and I'm just kind of covering, right? If you don't like the dash line, you can do the dotted, whatever. On these levels, you can do the offsets, right? You can change the sessions, right? The times when you want to orb. Some people, I trade, right? 9:30 to 10. If you want to trade 15-minute orbs, you will have to change that 9:30 to what? 9:45. If you want the extra fib here, if you want to show it between, sure you can. And those become kind of like golden pockets, right? In between. So, you know, in the orbs, this is your golden pocket for, you go under it, you're shorting here, you go above it, you're becoming basically long on the other side, right? So if you go above, you come for a retest, that's a long. Let's see what else we have. So this is your CCI. So if you come here, you guys have a different one, right? You guys use one that has super trends and all that stuff, correct?
Yeah. The orbs, yeah, we use the orbs with target.
You guys use this one.
Yeah.
So you guys use this one here that has a lot more and we can kind of cover it. So does everybody knows what's IBH and IBL? If you don't, that's okay. That's why I'm doing the class. Is anyone that doesn't?
I don't understand it yet, Shorty.
Okay, perfect. So let's talk about it. I'm going to hide this for a moment to give you. In trading of market profiles and volume profiles, there's something called initial balance. Okay. Initial balance in the market is after the first hour, where's your initial balance high and where's your initial balance low? So if you think about the candles, right? Here's your 9:30 and this would be 12. So let me see. So for the day here on NQ, this was our initial balance low. Let me check. Yep. And this would be initial balance high. So, and if you use, so this is your initial balance high. And this is your initial balance low. So I'll cover this concept so everybody understands it or reiterate it for people that have been this. So this is the 1 hour balance. That's what this represents putting. So within an hour, this is where we traded 1 hour balance.
Okay.
Okay. So what this one says, the way we play this one is if you spend 3 5-minute candles above after 10:30, meaning from 9:30 to 10:30, this is our initial balance, which would be somewhere around here, right? So this is the balance right here. So for the first hour, if you spend 3 5-minute candles up top, so if I go on 5 minutes, and if you broke this range on the top, that means 80% chance that this initial balance low of the day is set, meaning you're not going to break it. You're not going to break below. There's 88% chance you're not going to break this bottom.
Okay.
So how can you use that in trading is that, well, it gives you a sentiment, statistical sentiment that we're going to bounce somewhere.
Yeah.
Right. So if I know that there's 88% chance, let's say if these candles were up here and they closed, well, then if you're coming closer to the bottom and you use volume profile, let's say, I don't know, from here to here, and it's telling you, hey, this is a good level to buy, then you know, the odds are in your favor. And this is about odds and probabilities, not more about, knowing where it's going to go. So now if this was true, then I would go ahead and buy it long. If the candles were below here, right, on the initial balance, right, once the initial balance is set after 10:30 and you spend some time below, right, well, I know the high of the day is set 88% of the time. If the high is set 88% of the time, I will know where I can short and have the odds be on my side. And that's how we use initial balance high and initial balance low. Is there a relationship between initial balance and prior day value areas? Anyone? Trick question.
I'd say no. Repeat the question again.
Yeah, please.
Is there a relationship between current session initial balance and prior day value area? Think before you answer.
Yes.
Yes.
Okay. Who wants to take a stab at that?
If you breaking out of yesterday's value area high and you're testing the high of it and you fail to break it, you're accepting that higher value. So that initial balance is kind of sentiment on direction for the day, I guess,
Okay.
compared to yesterday.
All right. Well, let's take a look at these 2 days, right? So this would have been a prior day value area high in this case. Let's change the line so I can reference them. Yellow, like a dirty color, dirty mix would use. So if you look here, this is a prior day. We don't know about this day. This was value area high, value area low. Now you're opening a day, right? This is extended hours. You're opening a day, and then 9:30 comes, and this is the balance that you set. Your initial balance is what compared to PD value area high? PD value, I'm sorry, is higher.
Yes.
So the market initially in the auction is saying, hey, we are rejecting this as our value.
Right.
Okay, well, if they're rejecting that as a value, what should they not break?
The initial
Think auction. No,
They
think
shouldn't break
auction.
the prior value area high. You shouldn't break back into the value area of the
Right.
prior
Shouldn't
day.
break that POC.
Most
No.
likely you should not go below the POC. Where was your equilibrium? If you have a P shape like you did here, short cover rally, and you're setting up, this is a specific scenario. If you're doing this and you have a P shape short cover rally and then you pop, your initial balance is higher than previous day value area high, right? Which is also your PDH is sitting right here and they kind of tiptoed around it. And you see they broke inside of it and then they bounced. And remember, we were live and we were talking about, are they going to do this or not?
Mm-hmm.
And if you're able to break this POC where this accumulation happened and imbalance, what does that tell you?
Super bearish.
It would
Bearish.
be super bearish. I would guarantee you 43.70 is going to get hit.
Yeah.
Like easy 43.70. So initial balance does have correlation to previous day value because that's probably going to be the forming value area for that current date, right? So we popped above here, right? You see them, you know, intraday, they popped above it. They didn't really like the value, but they're in balance. They closed within the values. Like, okay, I'm sorry, it's yellow again, but you guys see it. So this is our current value here. This range is our current value. If we are falling back inside this value, let's say tomorrow comes or 6 o'clock comes in and they start losing this right here, which should be low value and the previous day value area high, it's a really quick sentiment change there. Does that make sense? It would
Yes.
be, you're going from one value that you can't hold. That means initiative sellers are coming. And at the same time, that means they're immediately fighting with who?
With the aggressive buyers,
Responsible buyers.
responsible buyers, right? So,
And if the initiative sellers are able to take that out, then, you know, I'm saying you could play this retest here and go short to this level. There's some points.
yeah.
As you approach this level, you got to be careful because it's really a sentiment shift happens here.
So
In a
another
2
fight.
day, they can really dump after they lose this level. And then if you drop from here to here, you know, that's the POC, cumulative 2 day POCs right here.
Yeah.
So you lose that, most likely you're targeting the bottom, right? So I would first target this, and then I would target probably, let's see, where's the 68 on this guy? So you have this one here to be aware of, right? 14,433, 50 points. And that's a developing area, and then the bottom would be here. That's just 2 day. I'm looking at 2 days, nothing else, guys. And I already defined the plan using that. So that's how the initial balance will help me, right? We're setting initial balance higher, but we're not accepting it, right? If we set the initial balance, let's say we opened here and initial balance high was set at the previous day value area high, what would that tell you?
I'm sorry, Shorty. Say that again, please.
If the initial balance, if you don't see this day doesn't exist. And if
Yes.
the initial balance of that day was, initial balance high was the same as previous day value area high, what would that tell you in terms of type of day you might have?
Probably
Be a range day.
a D-shaped day.
Consolidation. Yeah.
Probably a consolidation and a range day.
Yeah.
And what
Yeah.
can you do once you know that fact?
You buy the top, sell the bottom, and you play that until
You
it
don't buy
doesn't
the
work
tops, you
anymore.
short the tops.
Sell high, buy low.
Yeah,
Yeah.
you know what I meant.
Do the opposite.
Short the top, buy the bottoms until it doesn't work anymore.
And that's how I say, look at the initial balance and the correlation to the previous day value, because the first hour will set the tone.
Yeah.
And if you use market profile, right, you know, those weird letters that you guys see. So each one represents, you know, the 30 minutes. And if you see, let's say, you know, A's are creating a balance and B's, and then the C's come in and they destroy the initial balance, let's say to a downside. Well, then you're looking at it. How's this, you know, where's the previous day value area? Where's the previous day POC? If that, you know, the C time frame comes in and they break the PD POC here, that means that's aggressive sellers coming in. And until aggressive buyers find value, which would be somewhere, you know, in this case, it would be around here. If they come in and you see the price is not going lower, right, easily, well, that means there's some absorption happening, right? These people are closing their positions, and you might most likely have a shape that looks like
Mm-hmm.
aggressive sellers come in, they're taking their profits, right? Here comes Jim from the opposite side, and he's like, short, and he shorts, and then it goes to here.
Yep.
Does that make sense?
Mm-hmm. Mm-hmm.
Okay. So back to orbs. Does that make sense? The IBH and IBL? Does everybody get that now? This is where you say yes.
Yes, thank you.
Okay. So the rest of the settings, right? So you have the trend bar, the fibs, right? So I wouldn't mess too much with the fibs. Basically takes the 30-minute fibs highs and lows and produces the targets. Why is again okay, I was on the wrong one. So this is your IBH. That's the setting for IBH. I'll find the IBH for you and kind of print it out there. So let's see here. I'm just making sure I cover everything from it. Original trend bar, right? So you can do the original trend bar. I suggest you guys use this one. Basically, anytime you're above the trend bar, the trend is fairly strong. As you break these trend bars, they become support and resistance levels as well. Especially if you're using 5 minutes, you can trust them a little bit more than not, right? In this case, you see the momentum is gaining here, right? And they break above the trend bar, and of course, they come into the 50% of the orbs. When you play orbs, orbs is a different sentiment than initial balance. So it's totally different trading. If you think about orbs and way back, has anyone ever been on the floor or ever on New York Stock Exchange or Chicago? No. So before, you know, if you guys just look up old quotes and bids and people on the floor and buying and selling, the only way to tell, you know, the excitement was people screaming, yelling, shouting orders, and the body language, right? And that's the only thing, honestly, in nature that can't lie. People can lie, but once you look at their body language, they will tell you if they're lying or not. A lot of times they couldn't hold back the excitement, and within 30 minutes, people would know, are we bullish or bearish, hence the orbs opening range, right? So within the 30 minutes, they're able to distinguish the highs and the lows and be like, okay, well, are we spending a lot of time above it or below it? If we're in between, like you were here, right? You had the orb high and you had the orb low. You went down, you bounced, you went below, you reclaimed it, man. You closed within the opening range of 30 minutes. So what would you call this day? What type of day was Friday?
Range day.
Be careful.
Trench day.
Typical.
It's a typical day. This is called a typical day. Pretty decent, you know, range, about 100 points, I would say, right? Or more. Let's see. 200 points, I would say that's a pretty typical day. Wide, typical, and on typical days, there's a rule on 50%, is there? What's the rule on typical days?
You short the top, you sell the mid.
Short of 50, right? So on typical days, once you, and this is where combining the information becomes solely on you, not me. I present the ideas and you have to kind of develop your own ideas and strategy style from it. So here you have the orbs. If you break the orb highs on a retest, you got to go away from it. You know, breaking here like this and here is not a retest on the orb high. Let it go higher. Once it comes back, that becomes an opportunity, and then you have the targets you're gonna use. Then you could correlate to, you know, volume profile using to find the levels or whatnot. But purely orbs, if you're fairly new, try it out. If you go above the orb high, come back for the retest, each one of these becomes your targets for taking profit. Okay, and same is true for downside. If you go, let's say on a typical day here and you're struggling, you're coming to the low, you break the low. Once you reclaim the lows, you're going long. So you went below, you claimed up here, and usually, if you guys remember from previous training sessions, if you reclaim or below, what's the first target?
50%.
Always 50%. If you go above and you fail to hold orb high, your target is 50%.
50%.
If you break the orb high, let's say like you, or I'm sorry, orb low here, you remember you have to break it. You like this one here is a decent break. I mean, it went one level below. You came back. If you shorted this and you caught this, I am pretty certain you can make money between 14,557 and 14,496. This is a good point. But once you know you, let's say you exit on this level, you reclaim this, your sentiment shifts to the upside. So you have the trend bar to help you with that because you can use that as confluence, right, in trading. I typically, if I'm trading the orbs, I like to see, you know, kind of confluence points of 3, meaning you have the orbs, you have the trend bar, you have the VWAP, right? And that's what I would use if I was a new guy learning orbs and trading and practicing my strategy is 3 points. Here, you're not able to break the orb high. You have the trend bar showing you red. Let's say here you have the, you know, the VWAP, that's 2, and then you're looking kind of for the third one. So here you would have, you broke the 50%, you're below the orb high, you have the trend bar and the VWAP. If you're a momentum trader, you can take this short. You can take this short here as well. You have 1, 2, 3. So if you took that short, your next level, you're making sure you get out. And then you break this one, you're again looking, if you're gonna break this level here at the point, you can take that. But what do you have here? You have VWAP only that's breaking to the higher. And in this case, you would have had the 50%, that's 2. So not as aggressive. If I was trading solely orbs, I would incorporate trend bar to be my first sentiment of direction. Meaning if we are below the trend bar, I'm not looking for long. I would play strictly the trend of the trend bar. Does that make sense?
Yes.
Okay. SV,
Makes sense.
everybody know what SV stands for?
Stopping volume.
Yeah, so SV means stopping volume. So remember, when you're trading and, you know, the market auction is going higher or lower right here, at one point, right? Let's say we're selling. Well, you're a seller here. You sell peanut butter, and price keeps dropping here, and price drops to peanut butter $2. And you're like, man, my cost of peanut butter was $4. The price is here. What are you gonna do as a seller? What would you do to your inventory?
I missed that.
Okay, you
Unload
guys
it.
are selling peanut butter. The price is dropping fast. The cost of your peanut butter is 4. Current price is showing 2. What do you do as a seller to your inventory? Do you make it available, or you pull out if you don't want to sell it?
You limit,
Then you pull out.
pull out.
Yeah.
I mean, you're not stupid enough to sell it below cost and lose the money.
No,
Pull
correct.
out quick.
So what you do is you limit, and then eventually the price will drive itself to equilibrium. When that happens, if you're to say, hey, there's no more peanut butter at $2, I have 0 left, the buyers would step in because this is their last chance to get the price at such level, far
Yeah.
away from value. So that's where you get these stopping volumes. When there's no more opportunity, there's no sellers, and they're like, oh man, we don't have any more. Well, they're like, okay, well, let's buy. That's where you get these stopping volume candles, and you see these little SVs that are showing up on your chart.
So
The
that's
rule on
the
SV here is basically showing you, I think there's a percentage you can change, at least. I asked them to have it. Okay,
so
there
when
it
that
goes.
shows up, that usually means it's about to stop either
Stop
buying or
going
selling.
up or down, depending on where it's showing up. If it's on the bottom, that means the selling is being absorbed by buyers twice. And you see here, not a single body went kind of below this candle. Here was a stopping volume on this candle,
Yeah.
right? Once you broke that one, you really never kind of previous higher low, you
No.
never really came back and tested it. So, and you can change this, right? If you want to be more strict, you can change the setting from 30%, let's say to 50%. You might not find a lot of stopping volumes. And the higher the percentage you have, this one here shows pretty good, but it's a 355. I personally don't trust stopping volume candles at, between 330 and 4, just because MOC comes out. There's a lot of emotions the last 30 minutes. So those volumes are, I would say, not the most realistic that I would trust, if that makes sense.
Yeah.
What times did you say you don't trust? You said from.
Well, I would say 334. I wouldn't trust stopping volume too much, where I
Okay.
can base my trade for the next day.
That makes sense.
Yeah, it's just a lot happens, but for me, I think 35% is pretty good. And then when you correlate this to your pin bars, right? I mean, if you add pin bars here, you will see that, you have a pin bar here and stopping volume. So the way you can play stopping volume candles, if you're just price action trading, if you see a stopping volume, you usually want to take it once the full body candle breaks that on the same time frame you saw it. If you get a candle close below it, you take that. And the first candle close below it happens where? Right here, correct?
Shorty. Yes. Shorty, what did you say? It changed the. What did you say? You changed the percentage?
I keep it at 30, but you guys are welcome to change it. If you're more risk averse, put 35, 40%.
Where is that at?
Under 7 band. I'm showing it. I don't know if you guys are able to see my screen, but
Sorry.
I'm showing it here on the bottom, right?
Okay, I gotta find it.
Then what else we have on this study itself?
Oh, yeah.
So you have the trend bar, you have the pivots, right? And a lot of you guys use the pivots, and you have the prior day open, close, prior day low and high. I think these are, if I was to pick, I would take these off, keep these on, and the pivots, right? The pivots that you guys see on your screen, let me go find them. They might not show because we're after hours. There's usually you will have the daily, the weekly pivot, and the monthly, right? So for monthly to be calculated, it has to take 3 months worth of data for the monthly pivot to be calculated in the shifts. The weekly is the same thing, right? It takes 3 weeks to calculate and divides it. And then the daily pivot is also using 3 days, and it updates it daily because it's a moving, kind of 3 days in the rear. It takes the open, close, and the high and low, and for the 3 days calculates it, divides it, and gives you that pivot. And I would say these pivots are fairly important. If we're above the pivots, right, usually you're bullish, and then you're expecting bounces on those major ones, and they work well. A lot of times you'll see the weekly pivot hits to a dot, right? So those pivots are, if you're using, let's say, the orbs, they become important, right? If you see that, the weekly and the monthly pivot, let's say they're close by at the orb high, right? And you're retesting that where you couldn't break it, most probably that's a good setup for a short. Because there's a lot of resistance there previously, and those pivots are there. So most likely sellers are going to show up and you take that short. If that makes sense. So that's how you can incorporate the pivots. These fibs, as I mentioned, they're your targets. And then you guys also have failed auctions, right? Does anyone know what failed auctions are? Does anyone not know, I guess?
I don't know that. I've heard the term used quite a bit, but I don't know it, man.
Okay. All right. Well, let's do a game. I'm auctioning again $20 for you guys. I will give you $20.
I'll pay 18.
Okay. 18.5.
I'd pay it still.
19.
Sure.
19.5.
$21.
Anyone want to bet 21.50?
No.
Failed auction. The auction is no longer going to be going higher because
Okay.
now we found that let's call him nice names. We found a gentleman that's willing to pay 21.50 for my $20 bill.
I think that's called a sucker.
I call it keep holding the candle for us.
Yeah.
Okay.
That's the easiest way I can explain to you the failed auction.
Okay.
You got diamond
Auction
hands.
failed, and it's almost like when like I told you guys, I go to these like charities for kiddos and whatnot.
Yeah.
And a lot of times, I know how they work. I learned through the stock market, and I'm like, there's a couple of scenarios where they had like these vacation packages. I think it was like you go to Montana. Well, there was one actually. Did anyone watch Yellowstone?
Yes.
The show?
Hell
You guys
yes.
know what
Literally just finished the first episode yesterday.
Okay.
1883 is even better.
Don't mention the guy Rip to any ladies from that show. Something happens and they just get excited. Well, there was an auction where your significant other can go on a dinner and a date with Rip for $10,000.
Yeah.
Well, not a single fucking guy, man. Not a single guy in that charity event bid on that one. I guarantee. So I tell my wife, I was like, man, this auction's gonna get pretty wild with ladies. And I was like, right out of the bet, somebody's gonna pay more than 10K. She's like, no way, man. Wow. And I secretly know she wanted to pay for that as well. Out of the bet, the lady is like 12.5.
Damn.
Like, wow. And I was just like, okay, this is gonna go much higher. Another lady is like 15. I'm not kidding.
Wow. I believe
And I'm
it.
like, okay, the first two bids are used to see what is to see if we can bite and create momentum to bid. Hey, you're gonna have a dinner and a date if you're lucky. Get the full package, right? So it's a test to see. Those two first bids were not real bids. They're probably somehow integrated in the charity event itself. And I know it sounds like, hey, Shorty, you're a conspiracy theory. No, it's just how it works. I promise.
Yeah.
Now they created, and then they create more. Oh, Rip, you're gonna have a date, and then the screen comes up with Rip live and giving you a message. And then what do you see? There is a sucker, just like Seth. It goes 15.5 here. It goes and it quick within seconds. Going once, going twice, sold. Boom.
Yeah. They ain't playing.
And the auction closed.
Yeah.
and you got sold. You get a date with Rip for $15,000, and maybe you don't get your wife back. That's the same as a failed auction, right? You're bidding.
I get it.
You came here and it's like, oh, there's your $20 bill for $21.50 right here. You can keep it.
So
Shorty, did you say you don't get your wife back?
Yeah.
is a failed auction, is that different than coming up to resistance, you know?
Well, it is a resistance, but failed auctions have to be resolved.
Yeah, because Shorty, sometimes we see failed auction and the candle itself where it came up at, it takes it out. Like sometimes it comes on and
It's
then
almost like a liquidity break. That's what that is.
Ah, okay.
They're gonna come, they're gonna test it. I mean, so here you had, let's see, let me go 2 minutes. So if you had failed auction, you had a failed auction here between these two, and look what they did. Tuk. Let's just put a line. What did they do? They came back, they resolved it, they resolved the auction, they auctioned higher. What they come back again? They came back, they said, well, let's see how this auction does. They dipped it below, then they went higher, and then, I mean, literally, they stayed at that yellow line the whole day.
Yeah. Hey, Shorty.
That's just the one I see. There's probably a bunch. There's a failed auction here. There's a failed auction here that they came back and they resolved with this one. They didn't like going higher. So that's how you can look at it. Here it's pointing to some. I just don't see it. Well, there's 3 here, but weak.
Shorty, can you please explain again the pivots, man? I just didn't get it very good.
Yep. So we have the daily, the weekly, and the monthly pivots, and each pivot is, the higher the pivot is more important in terms of support and resistance. Daily is not as strong as weekly. Weekly is not as strong as monthly. If the price is above those pivots, you're bullish sentiment.
Okay.
If you have orb high that's being met, let's say with the weekly, the daily pivot nearby, most likely, and I don't know how to find. You have to go back in time to show them, I believe.
Yeah, I don't. Yeah, I think it has to be live to them to come on.
Fantastic.
Yeah, I went back. I couldn't see them neither.
Yeah, it has to be live to see them. But basically, what it does, it takes the 3 days open, close, high and low, and as the new day closes, it'll capture that data, open, close, and basically accommodates the shift either up or down based on price action, and it plots the pivot on a daily. Same thing is done on the weekly, it's just that it takes 3 weeks to do it, and then the monthly 3 months to do it. So the higher the pivot, right, the higher the chance of reacting as support and resistance.
Oh, okay. Okay.
And I've shared with you guys, most of you, the pivots on TOS as well. Any questions on orbs and what's all in them? I just think you have a lot more confluence. If you're to combine IBH and IBL with orbs, I think you would do okay. If you sit down and you study and you can define your strategy based on this, I think you would do okay. You don't even add anything else to it. I would just suggest you use Ashi candles, that's all.
If you're gonna do just like IBH and IBL, would you still kind of use Ashi candles, or just for that you'd say, yeah?
Say it again.
Let's say you were using just the IBH and IBL of orbs. Would you still want to use Ashis, or you think at that point?
You can definitely use Ashis. Why not? It's just that if you look at the low of the candle, between IBA, it might be different.
Okay.
Yeah, and the only
you
thing
see the
about
low
it
is here on this one, and then if you shift it, right, the low is a little bit higher because Ashi's consider a previous candle close.
Yeah,
Regular candles don't look at previous candles like to form the candle.
Yeah,
Ashis do.
and it does change your levels a little bit too.
Yeah.
Yeah. Okay. So, because I'm thinking like I kind of want to use IBH and IBL for.
I in my head, IBH and IBL is always there. I mean, I don't.
That's
If I
fair.
don't label it, it's always in my head.
Yeah.
Okay. So you know, yeah, I'll just familiarize myself with.
Yeah. So
Yeah,
for
they-
me, it's important that you know where's the initial balance. Every day you should know initial balance. And if you guys recall the PowerPoint, I'm not going to bring it up, but
Mhm.
there was 4 opening types within value area, right? There's opening inside the PD value area, right? We can expect that we are accepting that value. There's opening above the PD value area below the range, right? Those are tricky. They can play 80% nicely. You can open above and below. And then there's a scenario where you're opening above the range, which means you're opening above the PD value area. And if initial balance is overlapping inside that PD value area, then it's giving you a little bit of a bearish look that you might not hold at PDH.
Okay. Yeah, I remember.
You'd be surprised how much we reject and bounce off those IBH, IBLs.
Oh, they're very important levels. And market profile, which where are we in June? I could probably, if the baby doesn't come before that, probably target. I don't want to take your weekends. Maybe next weekend that we cover market profile.
Nice.
And market profile, for a lot of you, it's similar to volume profile. The concepts are the same. Some nuances, right, versus excess supply, and then the sellers, right, where the VIX show up, like here. There's terminology that might be different, and I didn't want to add it. Where until you're understanding volume, having market profile and volume profile next to each other might cause you some paralysis, right, when you're analyzing. And I don't think a lot of you would be just ready to have both, where you'd be challenging yourself to take a trade. And I don't think that's the goal. But I think there's probably 20%, 25% of the room that's ready to see market profile, understand that. And then the next piece would be to kind of see the footprint charts, right? Where you don't really see the chart itself. You would see the deltas on the bottom. There's actually a study here. It's not the best.
Yeah, I'm not ready for that.
If you this one here, if you guys look at the footprint charts, I don't think, I just can't get it to work well in TradingView. But and Quant Tower, Jason actually from our Discord, he sent me a template that's actually pretty good. In Quant Tower, I know Ninja Trader also has it. That's really good. And Sierra Charts, probably the best, but it's also the most expensive platform. So that's I would be the next order for us to pick up as a group is market profile, footprint charts. At that point, you should understand volume profile, market profile, and understanding the bid and ask, right, on the footprint charts, and see, because the footprint charts are different than your level 2. Does anyone know how? Jason, do you know how? Because you're using it.
It's the market depth. That's what you're talking about.
Yeah.
The order book, yeah.
Those are the orders that are executed, while the level 2 shows you the limit orders, right? On the footprints chart, you see the buys and the sells. Level 2, you're seeing the resting orders, right? They're not, doesn't mean it's going to be there once the price arrives. It could be a ghost order. So that's the difference, right? And I think that would help you guys. Knowledge Seeker also uses footprint charts from, I believe, Trader Dale setup, where he's able to, and it kind of gives you the absorption if it's happening at the lower levels at the supply. If you're not going lower, you can see, then you can look at the deltas and see what's happening, divergences in those. Hey, we have green delta, we're dropping. Most likely you can, let's say, absorption happen, can expect a bounce. So if you combine market generated information like market profile, volume profile, then you add the footprint charts and a delta, I honestly think you will be able to generate your own trading style and a setup where you trade, because you're going to have a lot of information the market's giving you. And then you just basically take that information and you make insightful reactions to it. And I think your trading can elevate once you're done with all the 3 pieces. So that's the goal. That's at least what I have for you guys. Okay. So let me see. So if you guys don't know, my wife's pregnant, due July 5th. But babies tend to come sooner for her, so we're kind of timing that now to see what happens. So I will schedule it for Saturday if it's good for everybody, probably 10 a.m. If something changes, I would cancel, obviously, but we would cover the market profile from the beginning to probably intermediate level of you understanding, right? The concepts are somewhat the same as volume profile. The terminology and the details might be slightly different. Okay. So that's the plan. And I would hope that many of you at least, read the PowerPoint. If you have questions, take a screenshot, send me the questions, ask me, because I think it will help you as we progress next stage to the market profile where you have that picture all in one. Okay. Any questions so far? What we covered? We covered swing, the day, right? We created a plan for ES and NQ, and I'll write it up, of course. And then we covered the orbs, the fibs. Do you guys want me to cover the fibs, or is everybody comfortable using fibs?
I think going over them real quick would be nice.
Okay. All right. So when you're looking at fibs, right, if you're starting something like a long-term level, right, if you're starting, let me go on a different. If you're looking at a long-term like value here, you have to be careful not to mix it in with your trading strategy, right? So yes, this would be, all-time high to recent lows, and we're entering the golden pocket, let's say on NQ right here. So this would be the pocket that we are looking in. This is a good swing short once you're given a signal. So right now, if I go on a daily, right, it would look like, everything's making higher highs and higher lows so far. So we're pretty much, in other words, a market profile. You're framing up, the daily is framing up, the weekly is also framing up, and then I would say the monthly here is also framing up, meaning making higher highs, higher lows. Then what I would do to find the fibs of interest, this is the high time frame fibs of interest. Let's say I'm looking for day trades. And if I'm going off of 30 minutes, that's typically what I do is I will look at the swing where, the trend changed. So here you had higher highs, then you had higher lows put in and lower highs. So this pretty much, this trend here went up and this one ended and the new one started pretty much from here. Would you guys agree? So then this trend went from here to this strong high. If you guys remember, they did this after hours. So now if I grab this right here and I grab it to the highs, if I grab it from low to high on retracements, that's support. I'm looking for levels to buy. If I bounce at 38.2, what does that mean in terms of strength?
That's strong uptrend.
It's a fairly strong uptrend if they're holding 38.2. 50% is usually the typical bounce way they do. And look what they did here. They bounced to right at 50. Then you see that there's a new swing, right? You just have to break this in swings because it's a lot about symmetry. From here to here is swing A to swing B with retracement to 50%. Then you have from this point, I would say, to this point, right? So I could do that with fib retracements or fib extensions, right? So if I go here, I'm sorry, not there. So if I go from, let's say, here to here and I retrace here, now I'm projecting the levels where it might hit. I'm saying find a symmetry from this swing high, swing low to this swing high from this retracement and replicate this 100% move. So this arrow that I have now here is going to be replicated from this point here to here. And you see where's the 100%? Is it the same? This is the symmetry. This symmetrical from 0 to 100% is here. The 127% of this move symmetry is here and the other one's here. Does everybody understand the symmetry of the fibs? This is identical. I copied and pasted. And here from 0 here to the high, that's the 100%. And if I do this,
if it goes below that 50%, you wouldn't really trust the ABC pattern there.
That's correct.
The only thing I need from Shorty is if you could please post your fib levels?
Yep, I can do
Yeah.
that. I can add it to the power. I think I have it in a power.
Yeah, please.
I guess my question is more along lines when you're doing a shorter time frame and you're using your fibs during the day to try to scalp something really quick.
So if I was
That-
to use them for this, for instance, right? And I know this is annoying, but I have to know what type of day I'm having first. If I'm having a typical day, would I expect the 127 and 1618 to be in play as extension targets?
Nope.
No, I don't. If I'm grabbing this, let's say from the highs to the lows, right? And I'm using, let's say 5 minutes. Here's your 61.8 hit. You came back, you tapped it perfectly and you went down. I grabbed from high to low because I'm looking for rejections. If I'm looking for support, if I wanted to know, so let's just go naked for a second. If this is my change of character here, right, on the price action, you're going higher high, lower low. You change this, you know, the change of character happened on the down here. On the bullish side, it happened here. So if I'm looking to know fibs wise, where do I buy this? Well, I grab the lows to this highs, and then you can target usually the 50% to be your first entry. So if this is the swing, right, I grab the swing low to the swing high, you can target the 50%. In this case, this would have been 48. It would have came, probably you would have been stopped out if you're trading futures, or fibs wise, you're supposed to use these levels. If you're buying a 61.8, you can use this as a stop loss. Most people that trade fibs will use 786 as a stop loss. So this would be, if you're trading here, this would be your stop loss here, if that makes sense. If you're taking this, this is your stop loss. I like to use combo of these to buy long. And in this case, 50% would have been long, but you're playing the trend. And if you wanted to play something smaller, I don't know how small you're thinking. Let's say you're playing, this is nasty. Go here.
I guess one of the questions I'd say, like, let's say it's morning and it hasn't started, but you have some pre-market. So let's see what whatever the pre-market was
Okay.
there.
Let me go
Would
in
we
3
take it?
minutes. A little bit.
Yeah. Would we take it from the bottom of the nighttime up to, in this case, we shot up to our value, our IBH is right up top. Would we want to take it from that dip around 2 a.m. all the way
Like this
up?
one here? Yeah.
Yeah, or would we just do from the opening time?
I would do it from here. And it also depends what, you know, what the price action is telling you. So if you look here, this dip here, was it really the dip, purposeful dip, or was it a trap dip? It, you know, it didn't create any new lows. It
Like
didn't
a
really
trap
do
dip.
much,
Uh-huh.
right?
Yeah.
So if I look at this, right, you could use this one here. This one here seems to be more kind of, it has more importance than this
Sort of.
one.
Yeah. Uh-huh.
Because this one here was just a trap. And if you look at the lows of this price action here, that's the lows here. So if I use this, probably more important to use this one than this where they trap the shorts.
Okay.
So if you use that one, that'll be the idea. I will delete this one for a second. And here's that. So you could
So-
definitely use this, which this one would be 61.8 rejection from the top.
So we
down.
could have taken long there at
That's
that
correct.
38 for the run up before it dropped back down.
Yep.
So you said use the trap or do not?
Yeah, I would not use it here, but
Okay.
that's just me.
Gotcha.
I want to look at the symmetry move here, and then, for instance, let's go on 2 minutes. I'll just kind of show you guys. So if I want to know, you know, this move here, let's say you're really scalping. I'm on 2 minutes, and most of you guys should not be in 2 minutes. I'm interested to know from this high to this low. I want to find the targets. If I short, where do I short it?
Mm-hmm.
Okay. So if I want to know where to short it, right, I can grab the high to low, and there's the, you know, the 61, there's the golden pocket, right? So if I'm shorting here, how do I know the target using fibs? That's fairly easy. You could click low to high and enable 1618 and 1272. Or you could go to your fibs. If I go from here to here and here, now it's gonna print the targets for me for, let me find the other one. Let me just delete this so you guys can see it. Now it's gonna give me the targets for 1272 and 1618. And I'm just replicating this, guys. I'm just finding the symmetry of this move plus a little bit more.
Man, I
So-
just did it and it bounced on all the levels.
So look, if I do this, I
217.
just took this arrow and replicated. This is a symmetry move. From here to here is what I'm looking for. I'm trying to find where's this gonna replicate. Well, it replicates here. 100% of this move is replicated here. Do you guys agree?
Yeah.
The 127 is this piece right here. This is the extra. This is your first target is the 127, which is this line here. And then your second target, at least for me, the way I use fibs is this one. So if I shorted, let's say I shorted, if you, depends how you trade. If you shorted the break of the low here, right, which is a change of character, 4354. If you took that, well, then your first target would be 1272 and then the 1618. If you took a rejection on a retracement, which would be from here to here, then you're looking at this golden pocket that took it, and you probably put it somewhere above the 78.6 in this case.
Now, when you go with the golden pocket, do you end up starting at the first line of that golden pocket, or
I prefer,
the
yeah,
end?
first line. Yeah,
And then you can kind of like buy down and then stop
exactly.
if you want to
Yeah,
compress, and then you have a stop at that red line. So in this
that's correct.
situation, you might have got stopped out
In this
on the
situation,
initial.
on this short, you probably wouldn't have been stopped out.
I guess the second. I guess the
Yeah.
I guess the second one wouldn't have
If you're
happened,
gonna short the golden pocket, let's say you're shorting the golden pocket here, you can't just put it right above it, honestly. You have to use, if you're using fibs, you have to use the proper fibs to use it. 78.6 is the stop loss for this golden pocket.
Okay.
So if I'm using this, you got to give it opportunity to play out.
Mhm.
If I'm shorting this, then this red line is your stop loss,
Mhm.
right? And the targets are this 1272 and 1618, and that would have been good. And maybe tomorrow I can just trade the fibs and show you.
Yeah. I mean, I've been. This is what I'm trying to learn, this particular thing, because
And this is really, really like trend-based, like extensions. You can use this for stop losses for a lot of stuff. So if you look at this right now, I'll just go from the bottom, let's say to the top, and they're pulling back to here. You know, these are the next set of targets that you could anticipate. You know, if this move was to replicate, 100% of that move would be here. And then the 127 and 4509 would be the extensions of it. And that's kind of looking, I could look at the bigger picture as well. So let's say I want to know from this move here to this extension, right? Or maybe from here to here and find the next projections. I could do that easy. I do this, I do this. Here's the targets and here's the levels that it produces. So it would have missed this one by 20 points. It nailed 127 too many times. And all the levels here kind of are playing out. And 50% of this move here is up. So it seems like, right, that they are defining that they're pushing higher, which they were, but the fibs hit. And if I want to know the move higher, if I'm looking for symmetry, let's say between this move and this move, I can do that as well. So I'm going from here to this move. And let's say it's starting from here, then this move would repeat at 4662. The extension will lead at above all-time high.
now typically when you're doing this during the day, you're also looking at the nodes to see how they
Exactly.
correlate with those fib
Always.
levels.
Always. Always do that. And here's this. I mean, I personally think this is what's going to happen tomorrow. I'm just predicting, not reacting to it. But this is what you're looking at for tomorrow. And this week is going to be so big, guys. CPI, FMOC. It's going to be a clusterfuck. So, And if this plays out and this move that I just found, symmetry on the top to here, plays out, then 100% of this move, I'll just copy and paste this guy. The 100% of this move would be from here to here.
Oh yeah, that'd be great.
Sorry, not from here to here. From here to here is the 100% move. The extensions would take it here, and then this one would be the next one, 4307. And then, you know, like what Dean just said, do I look at the volume profile of this and be like, hey, what's going on? Yeah, of course. Right. If you see this here, this is the gap of the contract, right? So there is support at 42.96. And most likely, you know, here 42.74, because this was a huge balance that we've had. It's been 42.90, right? And most likely, this is not a bad level to catch some longs, because people are going to be freaking out. You broke 4,300, blah, blah, blah. Probably not a bad level for long.
Hey Shorty, I have a question. Kind of, well, it's related to this. Let's say you were on like a longer time frame. Let's say like you were looking at a year. Would you consider ever like drawing the fibs on the sigmas, like from 1/3 sigma all the way to
Yeah,
the?
of course. Yeah, I've done that before. Yeah.
Okay. Yeah, because
that's your bracketed market. So usually, yeah, I would definitely consider that.
Okay, awesome.
And I mean, if you think about this, if this becomes a bullish scenario, give you guys a clue. If this becomes a scenario where it's bullish,
oh wow,
in span of next 3 years, you're looking at 68, 77 on ES. That'd be crazy.
Oh my god. Jeez.
Wow.
Real quick, that's seven. Just to double check this, it was the 78. What was that? The stop loss number again. Hold on.
786. I'll post it.
Oh, 786. Okay, got it.
Yeah,
Okay.
please.
Okay. So that's all I had, guys. We covered swing trading setups. The best thing you can do as a trader now is spend some time on the charts, guys. It won't come to you if you don't spend time. I spend time continuously learning. I read books. I watch other people's YouTube videos, and it's not for me to mimic what they do, but it's to see if there's anything that I can learn to complement my own.
Yep.
Right? It's a continuous learning, guys. I don't think there's ever an end to a trader learning something. Even if your own strategy eventually might become stale. So markets repeat, but they also adapt. And you know, people say the inversion of 2 on 10 always worked a recession. Well, I don't think it's doing a recession right now. Right? Something changed. The liquidity, the treasuries, the way they're dealing with it is different. Okay. Well, all right, guys. Well, we're at 12:30 here, so hopefully you guys picked up some knowledge today. And if you guys have questions, if you have charts, use the chart section, post to get the ideas from the people that are in the room that have been doing it, that are successful. Look for setups. You know, even if you buy one share, just think about it. Let's say NVIDIA comes to 270, just buy one share, see if it works. Build the confidence onto it. If AMD comes to, like, let's say the level we mentioned, like, I don't know if it was 74, 75, buy one share. Even if you lose 50% on that share, it's $35. You guys mostly waste your money on coffee in a week on $35.
Yeah.
How long does it take once you? I issued my username for TradingView and all that for the orbs.
Mm-hmm.
Does it take
should
a
be
few
done.
days before?
Just tag Sincere Pickle. That's his name.
Okay.
He should be able to give that to you immediately.
Okay.
Yeah.
Okay. Thanks, man.
All right, guys. Well, thank you. Have a good day. I'll put up a plan. If I see a lot of movement on ES tonight, maybe an impromptu watch list just to see, but I'll define the levels and share with you guys.
Thank you so
Shorty.
much, Shorty.
Thanks so much, Shorty.
Thank you, Shorty.
Appreciate
Thanks,
you,
man. Thank you.
Appreciate it.
Thanks, Shorty.
Have a good day, everyone.
Thanks too.
See ya.
Hey,
Bye-bye.
Bean, you still on?
Yeah, I am. I'm
Hey,
getting
buddy.
to that. Hold on.
Do you have his? Do you
Yeah,
have?
yeah.
His,
I'm doing it. I'm sending it over to you.
okay, brother. Thank you so much.
Let me guess, the Fib numbers.
Yeah.
Will you send it to me too, please?
Yeah,
Well, I think I had modified mine before, and I don't think I did it right. So,
Oh,
I had mine.
That's not
because I
fine.
didn't, I just know. I mean, watching that, I learned that to do that fib retracement or extension, like that's
I
where
had a
you
whole
put
bunch
those
of.
bigger numbers.
That let me give you another picture there.
I had a whole bunch of
Angel.
them that didn't need to be there. That's what it was.
I was
Oh, I
putting
had
like some of those, like the higher numbers. I was putting them in the same column instead of like for where they go for like the extensions and stuff. So I was like, huh? How am I going to go all the way to there?
very odd. Man, where the hell's my mouse?
That was a good class, man.